What's going on, everybody? It is Thursday evening, Financial Thing, live stream. Hope you're having a great week. Thanks for tuning in. Hopefully, as always, we'll be done in 1 hour, always. It's been an interesting week watching what's going on with the GameStop fiasco and had some peer-to-peer news this week, which is not surprising to me. I've been saying it to you for a while now about RateSetter and what I thought was going to happen, and we finally saw it happen this week. So the crystal ball was strong. But anyway, hope everybody is having a wonderful week. Thanks again. We'll wrap this up in less than an hour, I promise you, this week. We're going to talk about a lot of things. We've got some peer-to-peer. We're going to be talking about the stock market. We're going to talk a little bit about cryptocurrency. I'm going to give you another quick lessons in options today. This is something I've been dabbling with for the last few months, and I've really discovered this is a great way to make income. You always ask me, Lawrence, interest rates are crap right now. Peer-to-peer, I'm not sure about that. How can I make income? How can I get yield? And I think, options are a good way to do that, as long as you do it in a very risk-managed manner. And there's two very different ways you can do it. And I prefer the low-risk way, where I own the stocks and write options against them. You can use that to create income if you're retired. Even if you're not retired, you just want to create some money based off of essentially staking the stocks that you own. So I'm going to give you a quick lesson on that today, show you a recent trade that I made, how much money it netted, and what the outlook is on it. We're going to look at the Trading 212 portfolio. I know I've been a total slacker when it comes to updating the videos. Apologies, but it is what it is. I will get a video up this week, I promise, with an update for everybody who wants to see what's going on with that, and that's where I put my own money up. I think I'm going to be switching to eToro soon. Couple of different reasons for that, but Trading 212 is fine, not to worry about it. But the folks at eToro, I think, have reached out to me and mentioned, that we may be able to do a deal that would benefit Financial Thing readers. I always like to pass on the money to you if I can, so we got that going on. Please hit that thumbs up. Please hit that subscribe button. If you're not subscribed to the channel, hit the bell so you'll be notified when we go live or when there's a new video out. And hi, everybody. The usuals are here. Alan Basingstoke, Mike in Southampton, Paul Bagworth, Norman P., Stephen Green, Colin Perry from the Peak District, Jackie Bennett. Hi, Jackie. Nice to see you. Dividend Dave Dawson is here from Barliston. Brian Hoborn, Vince from Leatherhead. Sorry, Peter Vince. Aki Chap is here from Chile, Accrington, as always. John Day from Nottingham. C. Junuke. I don't know who that. I think that looks like Hugh, an old friend of mine. So how you doing? Debbie at Mixed Media Arts in Cayman Islands. David Alderman is here, and out of Chilterns. Paul New in Stockport, where it's wet. Albert Adams, you asked me any thoughts on the recent 2 board appointments. Clarify what you mean, 2 board appointments. I'm not really sure what you're talking about. Michael Shaw from Battle. Smash that like button. Yes, absolutely. John Cutler is here. Annabelle Nyren is here. Susan Williams from Southport. Sue Lund in Tenerife. You poor thing, having to put up with that. Albert Adams, yeah, crowd property, absolutely. I can talk about that. Yeah, I love it. I mean, I like the board appointments, so it's really not much more to say. I think I talked about it last week. I like it. Alistair Porter, what's your thoughts on the Bank of England asking banks to prepare for negative interest rates? I will cover that in a little bit. Alistair. Stuart Berry, hi. Paul says hi. Paul Stitson is here. Stephen Hale from Nottingham, and Tony from Taunton and Somerset. That's a quick little hi to everybody, just so we don't go over an hour, which we never do here on the stream. Yeah, so let's get started. We do our loan pad update, as always, one of my preferred places to invest peer-to-peer lending. If you don't have a loan pad account, go to the Financial Thing website and click on the cashback page. You're going to find a way for you to get some cash back if you sign up. But Big fan of LoanPad, just slow and steady as always. One of the very good places I think that you can store money now. Will it change in the future? Absolutely could. Who knows? Well, I have no idea what happens in the future, but all I can look at is now and past history. I've been a big fan of LoanPad, and just slow and steady in the race. They've got about 18.5 million pounds on the platform now, on a loan book secured of 51.9 million, loan to value of only 40%, some of the lowest in the business. You are going to get lower interest rate returns because the perceived risk is lower. That's the trade-off. If you want to go chasing these higher returns, you're going to chase risk. Hence MoneyThing, Lendy, Funding Secure, some of the European platforms. They got a couple of new loans this week. 43 loans. It was 41 last week. One extended loan, 5 overdue, and 18,900 pounds being serviced on the interest coverage fund, which is a 40,000 pound provision fund. Not too worried about those loans at the moment. You are going to get some defaults. It is peer-to-peer lending, and we are going through this COVID problem, so don't be surprised. I mean, we've seen it on every platform. LoanPad seems to handle these past due situations very well, so hats off to them. I'm running through it quickly today because I really want to keep it under an hour. I don't know how, but we will. I have the disgusting green shake this week. I don't know if you can see that. Tetley tea is back in the cabinet. Lending Works, they are resuming lending, but they say negative interest rates will still continue. Not really happy with that. I think it's time for those to go, but they're saying in February that those should ease. Am I a fan of Lending Works at this point? Probably not so much. Just speaking candidly. Again, who knows what happens in the future, but I'm kind of in that drawdown phase at the moment. Just taking out interest and capital, seeing what happens with them. Excuse me, let me take a drink. Let me know what you think about Lending Works. I mean, if you invest in it, put it down in the comments too. And if you have any comments or anything you want to know about, whack it in the chat. I will answer the questions as always. Lending Works, they reported that they had annual losses of 4.4% all the way through Q4 of 2020, which really wasn't that bad. I was kind of expecting a higher annual loss than that, considering with what's going on with COVID and the fact that they are basically an unsecured lender. But I do expect that as the numbers come out for Q1 of 2021 and Q2, you probably see those losses start to increase a little bit. Cop. Now, the big news this week, obviously, if you keep your eye on peer-to-peer lending, we got the RateSetter news that they are going to be ending their peer-to-peer lending business. Metro Bank is actually going to be buying their loan book. And for those of you that don't know, there was a £384 million loan book still outstanding that is not being serviced by Metro Bank. That loan book is going to be purchased by Metro Bank now, which essentially means we're all going to be out of the peer-to-peer lending side of things, which again, I've been saying this for a few weeks now. That was what I thought was going to happen. I was kind of done with RateSetter. To be honest, the rates were just not attractive. And at that point, it was, I had exited out, I think 3 or 4 months ago. So yeah, Metro Bank will take on that loan book, which I think that's is quite risky move for Metro Bank, because with what's going on with COVID and again it being who knows the quality of that loan book. I really don't know that it was a good quality or a bad quality loan book, because nobody really knows. Obviously, Metro thought they wouldn't mind taking on the risk. They're going to get about a gross yield of 8% for an average loan term of 2 years. So if it does work out for them, they're going to get some interest on that loan book. But the big question was, what was going to happen with the provision fund? A lot of people were asking, RateSetter cut interest rates for investors to contribute to this provision fund. And so the provision fund increased. It got back to 101% coverage, which meant the way things stood, no investor should lose money. But what happens to that provision fund? Well, essentially what's going to happen, likely that provision fund is going to be actually depleted, because within RateSetter's loan book, there's going to be defaults. The idea of this provision fund is to cover everybody equally as an investor. So while it looks like the provision fund has a bunch of cash in it right now, as the loan book is taken care of, likely that the provision fund will be depleted to pay investors out of any shortfalls through loans that have gone bad or that need to be covered. So there's a little bit of a gray area when it comes to this provision fund. It's definitely not well explained. I could see why investors would be thinking, oh, well, we just contributed to this provision fund and now Metro Bank gets that fund and they get the loan book. Well, I don't think it's going to work out that way. And actually, personally, I think this is a really good result for lenders, considering RateSetter could have been in a precarious position as a company. Obviously, they were bought out for a reason. They weren't bought out because they were going great guns and they were making huge profits. They were probably in a little bit of a precarious situation, and Metro Bank might have been the rescuer for them. So for lenders and investors to get their money back is a super, super good result, especially, what's going on with the economy. So, whatever happens with the provision fund, I don't really feel too slighted. I do wonder, again, transparency, is it really there? But at the end of the day, I think that probably what's going to happen is the provision fund will just be depleted out and investors will be paid back. Metro probably won't get too much of that provision fund. If they do, that's just part of the business sale and what comes along with it. Personally, I'm totally happy to get capital, anything remaining capital back, and just to move on, find a better investment. It's been a weird year. I mean, who'd have thought this would happen? For everybody invested in peer-to-peer lending, you're thinking, God, I just want to maybe get capital back, and I'm happy with that. The idea of chasing a 1.5% interest is, for me, is not that important at the moment. It's just get capital back. So RateSetter will come through. April 2nd will be the date when the peer-to-peer lending closes. Yeah, I think a good result. So obviously, if you have an ISA with them, you're going to need to take care of that. I haven't actually looked into how that will work because I don't have an ISA with them, but I'll probably cover that next week, or maybe somebody else in the comments will know what's going on. So I'm just going to kind of take a look at the comments as I'm reading through this. Alan said, what's my thoughts on the Bank of Interest asking banks to prepare for negative interest rates? I mean, we all knew it was coming, so I'm totally not surprised. Don't keep your money in the bank. If it does go negative, you're going to be paying the bank to store your money. I'd probably invest it. If there's any money that you don't need right now, or just move it to a bank that's not negative. There are going to be some that won't. There'll probably be some that won't pay any interest, but just move your money out. There's no point in paying a bank to store your cash. It's kind of ridiculous. Hey, Stuart Barry is here. I think I already mentioned that. See, Chimpo Naughty, we got in Cambridge, Steve in Solihull, Derek Thorpe from a drizzly North Devon. Imagine that, wintertime in England being drizzly. That's what we're used to. Wouldn't be happy any other way. Richard Williams in Sussex. Unsurprising news from RateSetter this week. Yes, absolutely, Annabelle. Completely true. Dave says, Dave Dawson, shame about RateSetter, but at least handling it okay. I think they're handling it very well. If you look at some of the other companies that have really cocked up their businesses, RateSetter is, they get my thumbs up. Yeah, Stephen Hale says, RateSetter going less and less places to put your money. Well, you could look at some of the other strategies, maybe, as I said, options trading, things like that. There are some good peer-to-peer companies, probably 7 or 8. Hillary, Hi from Nottingham, Hillary. Nice to see you. Norman P is here talking about lending works doing the same as you. I don't know what that means. I'm not paying anybody negative interest rates. Annabelle Narin, lending works, I'm taking it out as it matures. Plan to close the account. Yeah. Lending works, Derek Thorpe's drawing down. Stephen Hell, lending works, boo, another learning curve. Yeah, I mean, nobody knew this was going to happen, right? If you take away COVID, these companies maybe would have been totally fine, but we just don't know. George Batchelor from Bridlington says, winding down lending works. Okay. John, leaving lending works too. I think everybody's doing the same thing. Hi, Arthur Atchison is here. Nice to see you. Steve says, lending doesn't work for me. Yes, I know. Andrew Loftus. So Metro have zero risk with the provision fund. No, they don't, because that provision fund will probably be used to cover bad debt. Andrew says, is peer-to-peer dead? No, peer-to-peer is not dead. Go to my website, get the top 5 list. I think there's still some good companies out there. LoanPad, Assets Capital, Cufflink, Crowd Property, Blend Network, Property Crowd, some other ones that I like. Sorry, not Property. Did I say Property Crowd? Maybe Propland, even though I don't invest in them. Evening to Robert Pates. Hi, nice to see you. Yeah, there is some still. Hi, Robert from Crete. Nice to see you. Mike Powell says, just signed up with Connective Lending, getting a huge sense of deja vu. I don't know who that is. Robert Pace, getting my money out of RateSetter quite easy. Excellent job. Jackie Bennett, I transferred from RateSetter to a new ISA provider. It took over a week to complete. Happy enough. Yes, Paul says, lots of scammers appearing on the Facebook channel. Yes, I know. I'm taking care of the Facebook group, by the way. If you spot any people spamming, sometimes I don't always spot it, so just let me know who it is. But I went through and cleaned out a lot of the spammers on there, so they're all gone now. Sometimes they slip through the crack. If you want to join the Facebook group, come hang out with us and discuss investing. Let me put it in the chat here so you can have that. And also, I want to talk to you too about shared knowledge. We saw this thing happen with the Wall Street bets kids I call them kids, a lot of adults in America, and what they did regarding GameStop, AMC, BlackBerry, Nokia. The power of shared knowledge is really an amazing thing. All these people came together, shared knowledge, invested together into these stocks. We saw this huge price bump. Some weird things happening with the platforms. Originally, I thought the whole thing about the platforms removing these stocks was due to market manipulation. I think there's definitely some of that went on, but I think as regards to Robinhood, it was something to do with a cash flow crunch for them. But it's hard to say. We don't really know what happened behind the scenes. But shared knowledge, come to the Facebook group, get on forums, and share your knowledge, what you know about these different investment methods and platforms, because that's how we all win, is by sharing knowledge. And now the power of the internet has allowed us to do this. I mean, imagine 30 years ago, we didn't have these platforms like YouTube live streams and Facebook and the peer-to-peer independent forums. So we're very lucky to be able to have that now. So definitely share the knowledge. How you doing, Kono Flow? Nice to see you. Alan Toombs says he thinks 7 good sites: Assets, Blend, Crowd Property, Cufflink, LendInvest, LoanPad, and Unbolted. I'm also ditching LendingWorks when I can. Yeah, I think you're pretty much spot on. I do like LendInvest, even though technically not peer-to-peer. Mike Powell says collective lending is Norman Akram's new platform. Basically, funding secures the early years, reincarnated, though not found the 5% fee yet. Yeah, are you actually signing up for that, Mike? Are you going to put money in? No, I don't think I could. GameStop shares, Lawrence, am I invested? I did, but I'm going to tell you, I did it more out of a principle, stick it to the man. I bought, I think, 5 shares. I plan on holding them till probably I'm in the ground. I think they're probably going to go Who knows what the price will be. They're going to go low. They're gonna crash. I mean, they already have. The only good thing is GameStop just has this new CEO who's the Chewy co-founder, who I think they're gonna do some good things with the company. But I mean, I didn't make the players anyway to make money. It was more of a solidarity. I'm gonna buy a couple of the shares just to sit on, not for a financial move. I don't think that those things are gonna really pop again. Jimbo Naughty says, RateSetter and Metro Bank buying out all outstanding peer-to-peer loans is the best news for us lenders. A relief and a result. Absolutely agree. Hi, Jackie. Honor, nice to see you. The Americans would say you spell honor in the wrong way, but it is your last name. Yeah, no Chica Boy this week. Yeah, and Mike says, all the platforms having issues with clearinghouse limits and currency trading limits. Absolutely agreed. Andrew says Lendinvest seems to be working very well. Recommended. Absolutely. Good comments this week. Again, if you have questions, pop them in the stream. And we don't have a dripping sound this week. I don't know if anybody noticed, but the dripping is gone. I finally figured out what that is. Let's talk about Cufflink. Now, when we had Narinder Couture as the CEO of Cufflink a couple of weeks ago on the live stream, if you haven't seen that, go watch it. Is archived on the YouTube channel. We talked about this loan, Southwark Park Road, which a lot of people were saying was a bit of one of those loans that was in trouble. So they sent a notice out saying, due to the current environment, we do not feel placing this property back into auction would be the best course of action. Therefore, we have agreed to a 12-month reterm to allow the clients to exit the loan while ensuring maximum return to our investors. As part of the reterm, the clients have also agreed to a further capital reduction to the loan, which will be shared with all our investors. We understand this may not be the outcome you're expecting. However, the reterm has completed. The loan will no longer be in arrears, which will make it eligible for sale on the secondary market. You will continue to earn interest on the amount you have invested in this deal. Now, I think this is one of the things I like about Cufflink. They really do take proactive measures to try to, they don't want to put borrowers into the ground, right? Some of these peer-to-peer companies, you might think, well, just take the property back. Let's just sell it on. But the thing is, one thing I know about Cufflink, they're very community-orientated, and they want a good outcome for both borrowers and investors. So they do tend to work out deals like this. I'm quite happy with that. I think it's good. I think it's proactive. Give the borrower some time to get themselves situated. Things are tough right now for a lot of borrowers out there. I know if I was in trouble with a loan, that would be a good outcome, so I'm happy to see that. Assets Capital, you can get out of your QAA at 0.4%. I saw this morning. It's personally the lowest that I've ever seen the discount rate. So if you've been looking for a good opportunity to exit out of there, 0.4% sounds excellent to me. And I put in an exit request, I don't know how many months ago, I think it was 4 months, to get out of a 30-day account position that I had. It wasn't a lot of money, but I was really wanted to test and see how long the exit was going to take. And right now I've got about 10% out, so it's been 4 months. Those things are not moving very quickly, nor do I expect that to change anytime soon. How are we doing for time? 26 minutes. Okay, good. MoneyThing administration. So that looks like it's going to be a complete mess, to be honest with you. Anytime these administrators come in, they just seem to have a way of cocking things up, and it seems like MoneyThing is no different. A couple of different loans that, when I was reading through the reports of the loan updates, a couple that stood out to me. My Ferrari, which I still don't know what happened to the Ferrari. I think it's missing with a bunch of cars, or together with some other cars, but I lent money on this Ferrari a long time ago. So it says that, this is funny, this is the update on the Ferrari loan. The administrators remain in office and have so far received monies almost sufficient to cover their costs, because that's the most important thing, right? Administrators, you get paid. Further recoveries are expected in the coming months, which means they will shortly be in a position to make some returns to MoneyThing. However, due to the outstanding costs and management charges owed to MoneyThing, this is not anticipated to result in a return to lenders in the short term. So yes, once again, everybody gets put in front of the lenders and the investors. So MoneyThing is going to get paid, and so is the administrator, First Moorfields. Well, what I think about that, it's obviously a pile of poo. It seems to be the same old story with administrators who are coming in and just chewing through any available recoveries with fees and then paying out the company itself. More interestingly, this was one of my favorite things I've seen this week. Bollington. This is a loan in Bollington. Builder putting up houses up there goes into default. They sell a piece of the land off to try to recover some money. And then what happens is the administrator, Moorfield, stepped in, borrowed 7 figures, I think it was £1 million, and decided that they were going to instruct a general contractor to build out the 6 houses on this piece of land. Obviously, they had no idea what they're doing, because in the report it said the contractors ended up using subpar materials. 2 of the houses were under contract for sale. Those 2 buyers pulled out, and no sales can complete until remedial work is completed on the houses. So, first of all, if you are a administrator, I don't really know what experience you have in instructing a general contractor to finish a building. Like, what experience do you have to know whether that contractor is doing the right job or not? Obviously, they didn't, because this goes to prove that Moorfields was incompetent, right? And then the other thing that we've seen, this has happened to MoneyThing before, and I used to like MoneyThing. Ed, I'm sorry if you're watching this. I used to be a fan. I was a fan. I thought you were doing the right thing, but it turned out that was not true. You've obviously lent some money into some bad loans, and the investors are going to get hurt. So on this Bollington loan, it says it's likely going to be 100% loss. And as an investor in that loan, obviously it was a mistake. I made many mistakes in my early peer-to-peer lending loan choices when I was inexperienced. Know much more now. But I wonder again, is there negligence? Could there be some negligence claimed against the administrator and MoneyThing for this complete cock-up of this loan? I don't remember how big the loan is in total. Maybe somebody else does. But just again, this is the worst possible scenario that we see for these companies that go out of business and the administrators take over. We've seen it. Anyway, I don't want to be negative, because I always seem to hop on these administration deals, but yeah, we just keep seeing more and more bad news, and every week I get depressed about it. I read through the Landy administration report, £642,000 in administration time costs for 24th of May to November 23rd. 6 months, right? They billed £642,000 in the administrator. I mean, yeah. You can see where all the money's going, right? This is what happens to your money when you're an investor and these companies go out of business, and they basically give you the big 2 fingers up in your face. Anyway, positive, Growth Street's paid back everybody. RateSetter is going to pay back everybody, and there's still some good peer-to-peer companies. Zopa, new investors will not be able to open a Zopa ISA before the end of the tax year. I'm not sure why you would want to do that anyways. But they're saying Zopa wants to prioritize existing investors to offer liquidity, and this is a temporary move. Personally, I think you're going to see Zopa go the way of RateSetter. I don't know when that's going to happen, but I don't think you'll be seeing any more peer-to-peer lending with them. That will basically be 2 of the big 3 completely out, and then Funding Circle, I'm sure, to follow out of peer-to-peer lending. What else we got? Let me look at the comments again. See if you have any fun things to tell me. I know you do. I know you got something to tell me. So nobody knows where where Cheeky Boy has gone missing. correct way for the English, Jackie. Yes, that is the correct way to spell honor. Mike Powell says, I will actually dip a toe to test out. Okay, interesting. I don't know that I will. Hi, Mansuk. Nice to see you. Welcome to the stream. Paul Stitson, any concerns with funding circle? Money trickling out very slowly. No, I think you're just going to see that happen. They're busy focusing on the CBILS lending. Not concerned about them today, at least. Could change in the future. Dave Dawson says, I'm more than happy with how Cufflink dealt with the Southwark loan. Yes, Alan Toombs the same. Assets Capital, Andrew says he exited request for 10K 6 months ago at par, 2,000 exited at the moment. Yeah, that sounds about right. What, 20%? Money out of RateSetter, I put extra into Cufflink, definitely. Nothing wrong with that. Brian says administrators write their own paychecks. Absolutely do. No spam for dinner tonight. Yeah, Brian says I'm expecting zero returns from collateral on MoneyThing. Me too. Yeah. The worst thing is I don't think we're going to be able to write the taxes off on collateral. MoneyThing, hopefully there's going to be some tax write-offs. I believe you can do it for up to 5 years. I don't know what the exact tax laws are because I've got it written down, but off the top of my head, I don't want to give you the wrong information. There is going to be some way you can use that to write off taxes against interest earned. Hey, Vlad, how you doing? Vlad Petrov here, the Bulgarian crusher driving that 18-wheeler. Nice to see you. Everybody says, yeah, invest in administration companies. So let's go ahead and we're going to take a look at a couple of things on our, what are we doing? Let's look at our slides today. We had a couple of slides where I wanted to show you what is going on with Lendy's recoveries that was in the administration report, just so you can see and be aware. Some of you hopefully have not experienced any administration. Hopefully, there's some of you that have been lucky and invested in the right companies and the ones hopefully that I've been telling you about. But this is out of the Lendy report. You can see some of the loans. This is the one that also always bothers me, is this Lendy service fee up here and Lendy's contractual entitlement up here. This is what Lendy is paid once these recoveries are seen. So this one isn't too bad. 118,000 of this part of development number 32. So lenders got back 117,856. This is not the total loan, by the way. This is just the realization. So they don't show what the actual original loan amounts were for. Much higher than this. But you can see here, a bad example right here at the bottom. DFL 033, the Haymarket loan, £1.65 million in realizations. And Lendy entitled to just a little bit under 600,000 of that. Crazy, right? This is under contest in court right now, which I think it should be. This money should not be going to Lendy. They do not deserve it. And you can see here out of the 1.65 million that lenders as investors only received £795,000 back on paper. So again, this is kind of the really bad case scenario. How about this one? DFL 32 or the Mez loan. Lendy receives everything back and investors contractually get zero. Yeah, I mean, again, it's just part of what goes on with an administrator. They come in and these fees right here costs, third-party costs, administration fees, other fees, legal fees are going to eat through the recovery amounts. And we just hope that these companies don't go into administration, but it happens. This is a Southwark Park Road notification about what happened with that loan and how they were able to come to this 12-month extension. So we're going to talk about options for anybody that's interested in the stock market. I'm just going to show you a trade that I made this week. I've talked in the past, and I've been getting so many questions about this, about what are these options, what are these covered calls that you write on stock that you own. Something I've been experimenting. Basically, you actually sell options based on the stocks that you own. And let me walk you through how this works and why do you even care about it. That's the most important thing. The reason why you might want to look at this is for income purposes and for returns. Now, every investment strategy is different for everyone. You have to look at what works for you, right? Some things are riskier than others, like options. You probably heard can be risky. They sure can, but there is ways to manage the risks, and how you do that is you actually own stocks and companies that you actually want to hold long term, and also that you're not married to. So basically, with an option, you're writing an option, giving somebody the option to buy that stock from you at a price that you pick. So let me show you a trade that I made this week. I've kind of been looking into this company, Neo. I'm not really a huge fan of Chinese stocks. Sorry for anybody that's out there who's watching from China. If you are, doubtful, because YouTube is blocked over there. But this is just, I saw some opportunities here with Neo. I think with the electric car technology, what's going on with Tesla right now, Neo might be in a favorable position. But what I saw too was the possibility of how to make income on these options trades. So what I did, step one, I purchased 100 Neo shares, and this was done in US dollars through a US trading platform that allows covered calls. I haven't quite figured out in the UK which the best platform to do this is on. You can do this in the UK, and when I figure that out too, I'll let you know the best place to do that. But just follow along with me. So step one, I purchased 100 of these Neo shares at $53 and 40 cents for a total of $5,340, right? You can see the trade right here. This is the trade. Neo is the symbol. We bought the shares here, and there was no fee because trading is pretty much free on these most trading accounts now. So here's the price we paid, $5,340. Now what I did is, as soon as I bought it, I sold one options contract on these 100 shares. So on this stock on the US trading platform, which, by the way, if you're a UK resident, you want to get a US brokerage account, you can do that through a company called Tastyworks and Tasty Trade, which I recommend. They're pretty good. So anyway, I sold one option contract, and what I did is set the price right here for $65. So I paid $53.40, and I'm willing to let these shares go for $65, right? Now, what that meant is that this person that bought this option contract paid me right here $339. So I get to keep that money no matter what, right? Here's the down here. You can see the trade on the 5th of January. It's US date, so it's flipped backwards. We sold a covered call option, $65. That's the price target. And it expired on February the 5th, 2021. So it was basically a 1-month contract on that option. You can see here, this is the fee we paid, and this is the amount we got to keep, essentially $339. Now, what happened was the Neo stock went up a little bit. I think it hit 60, 61 at one point, but over the month time period, Neo stock didn't hit this $65 price. So what happened was the option just expired, worthless. So the trader lost the $339, which I kept, and I kept my 100 Neo shares, right? So I turned around the next day. Let me move this out of the way. I turned around the next day, and I wrote another option. Okay, one more, doing exactly the same thing for a month out. $65. The price was, I think at that point, 57, so, or 56, something like that. $65 option expiring on the March 5th, 2021. And again, I was paid another premium, almost, it was identical to the other premium. Okay. So $338.99. So I get to keep that again, no matter what happens. And this is an option now that is in play. So right now, financially, you're probably wondering, well, what does this all mean? This is what it means. So I purchased 100 of these NEO shares. And again, you could do this with any stock that trades options, and most do. You can even trade SPY, use options on SPY, which is the S&P 500 ETF. Anything, as long as you purchase 100, you have the money to do that, you can do this. So again, I paid $5,340 for these NEO stocks. I received $678 in premiums right here. That was what I got to keep no matter what happened. And what this has done now at this point is now I own this NEO stock for less money because I've made $678, right? So this is what we paid, $5,340. You can say this in pounds. It doesn't matter. It's just a currency. Less the $678 in premiums right here, right? Now I own this stock for $4,662. So what I've done is average down my cost of this NEO stock. Now I own the NEO stock for $46.62 per share. Remember, I originally bought it at $53.40. So the possible profit, again, if this option actually gets executed, so if NEO does hit 65, I'm actually going to make $11.60 on my 100 NEO shares, because remember I sold the option at $65, so I'm making a possible profit right here of $1,160 on the sale. If that options trader has to execute, if it hits 65 by the time that the option expires in March, they have to take those shares. So I get paid $1,160, right? So that's the possible profit on top of the premiums that I got to keep. So $678 and another $1,160, right? So if NEO's price reaches $65 on or before March the 5th, 2020, and the option is exercised, which it automatically gets exercised on March 5th if the trader doesn't close out the option. They have to buy that stock. They can close it out early if they want, take their loss or take whatever it is they want to take. But usually these things tend to just expire out because they're usually done by hedge funds and big financial companies. But this is the total profit that we made on doing this covered call strategy. Worst case scenario, it was $678 that we got to keep in premium. So we made 12.69%. That's over 2 months on this stock, which I don't mind, by the way, holding NEO. Again, not financial advice. I don't know anything about what I'm talking about, but I think the NEO stock is probably going to hit about $85. So I don't mind, holding these shares long term. This is key, right? I'm not doing this with shares that are, I wouldn't do it with GameStop. I wouldn't do it with AMC or BlackBerry or some of these crazy speculation stocks. I'm doing it, you could do it with Apple. You could do it with IBM. You could do it with any share that you have belief in that you would like to hold long term. So best case scenario profit, look at this, $1,838 with a 34.41% increase. That's what we made profit, best case scenario over 2 months. So worst case, $678 and we keep 100 shares. Best case scenario, the price pops to $65 or more. The option gets exercised, and now we cash out for $1,838. This is what covered calls are. And the beautiful thing about it is if you have stocks sitting in your account now that you're sitting on and you're retired, you can write options against these stocks that you own every month, and you can get this premium paid to you. So you could literally have $398 or pounds, whatever it is, of income on this stock that you own. Now, premiums on these stocks, they vary differently based on the volatility of the stock, what the stock is, the time frames that you're writing the options are. You're going to get paid more if you're writing options 3 or 4, 6 months, a year out than you are in a month. You're going to get less if you write a weekly option on it. But you can use this strategy to really create income for yourself. And especially in times now where there's no yield on money, you can't get any money in savings account. Buying stocks and trying to buy and sell and flip them, inherently risky. But this is an excellent way, I believe, to really create income off of the stocks that you may already own, and that you don't mind if that price hits the target sell price, they get taken away from you. Oh, well, you could just rebuy them again. You can write more options when you rebuy. Of course, there's always downside negatives, and I don't want you to think this is a completely risk-free way, because on the end of every trade, there's a winner and a loser, right? I happen to win on these 2 trades, writing these covered calls. There's a couple of downsides. And first of all, if the stock were to plummet, the market corrects and the shares go down to $34 or $25, you're obviously now holding a share in something that you might have not been holding. Me, again, I'm a long-term holder. I'm a long-term investor. So if I hold these shares for 5 years, I don't mind. So I don't really see that downside. And plus, if I'd have bought the shares anyways, which I own them, would I have sold them when it was plummeting down to $30? Likely not. I know that I only lose money in the stock market when you sell. So I'm going to hold. I'm a buy and hold person anyways. Unless I see something that really makes me think I need to exit out of this stock. So I don't really see much downside on the stock correcting backwards. Now, on the upside, you're going to miss out. If that stock for some reason were to blow up, and like GameStop did, and say NEO goes from my $53.40 purchase price up to $85, well, now I missed out on that extra $15 of uptick because I sold out at 65. If it goes to 85, I've missed out on $20 of uptick. So, you've got that on the upside. Excuse the dog. You've got that on the upside. You may miss out on that, but it's a very, very risk-based strategy that you can use. Stop it. The dog is going crazy. Hey, I think there may have been somebody at the door. So anyway, this is live. This is what happens when we're live. Things happen. We get dogs barking. And that's how you know we're live. So yes, if you have any questions about this, if this looks like complete Latin to you, you don't understand what the hell I'm talking about, I will write a video. Hey, knock it off. Stop it. In case you're wondering, this is the culprit of what's going on here right now. She's looking a little confused. But yes, I'm good. I've not been promising a video about this, but I figured for you live stream people, I would try to explain how you can use this. Again, look into it. In the UK, things do work a little bit differently. You have to do it on UK shares. You have to own 1,000. So you could essentially pick out shares that are cheaper if you don't have enough money to buy 1,000 shares. Just find cheaper shares that you like. You could write it on some of the shares that I have in the Trading 212 portfolio, which, by the way, I will show you in a minute what's going on with that. But yeah, that essentially is covered calls. That is a trade that I made recently. And yeah, I know it's probably a little bit confusing, but as I've always said, that I want to show you ways that you can create, different ways of investing. Not always right for you. Again, look at what's right for you. But there's a great book called Covered Calls Made Easy on Amazon, which I really think is a good book to get started and really understand. That book kind of says that you want to pick stocks that don't have a lot of volatility, things like Coca-Cola, dividend-paying stocks you can do it on. But I think it's a good strategy, at least for me right now, and it's one that I've kind of enjoyed dabbling with. I'm not a big stock purchaser, a single stock purchaser. I try to keep things diversified. That's why I'm always talking about buy index funds, because you get to buy the whole market and you're not trying to throw darts at a board, trying to hit winners. And let me show you, by the way, what happens when you do that. We'll do a little Trading 212 update, and then I'll answer any questions that you have. The trading 212 has been going really well. I mean, I've gotten very, very lucky with this portfolio. Anybody that hasn't seen this before, I started with 5,600 pounds. For US people out there, I don't know what the conversion is. It's probably $8,000, and I picked out a portfolio with the goal being trying to beat the index trackers, which obviously I'm crushing it right now with that. But again, this could totally have gone the other way, and long term I would not expect these results to be what they are. But you can see here we're up 85% right now on the portfolio, 10,749 pounds. Actually, we've invested a little bit more, 5,792 pounds. Sorry, not 5,600. So yes, a little bit more went in, but the portfolio has been doing really, really well. You can see here the results. Nothing is really in the red except for Too Low Oil, which is actually a British company. It's my only, I've got Lloyds Bank too, but down 11%. A relatively small investment went in there, only 262 pounds. So, not a bad result considering. Could have happened with any of these shares. I mean, super happy with the way most of them have been going. The real winners, just to look through, Laredo Petroleum. This was a new addition. I've been looking at the cyclicals about getting into oil. I'm not really sure about oil long term, but this has just done really well. You can see right here it's up 42%. Put in an original investment of 824 pounds and now up over 1,000. Did I get that right? No, sorry. We're up 243 pounds. We have an 821 pound holding. Lloyds Bank, I swear to God, I would never have thought about even owning Lloyds Bank. I'm just not a big fan of UK companies, but Lloyds just seemed like it was a kind of a no-brainer back at 20. What I bought in at 24.91 pence, and I just couldn't see at that point that it was a bad place to be putting money. So we're up to 36p. I'm kind of thinking again 50p is going to be the exit point of Lloyds. Will it hit that? I don't know. I have no idea. The other big winner, this has been an absolute home run, Magnite. I've been talking to you about Magnite for a while. 200% return. It's just insane what this company has done on the markets. Is this a good price for the stock? I was kind of, again, targeting about $50 for this, so we're starting to get towards that area. Might be a time to sort of exit out of there. But doing really well. And then Tesla almost doubles. That doesn't really make any sense, but Tesla just seems to be rocking along. On and on and on. We're up 1,000. Well, right now we got 2,165 pounds. We bought in for $403 a share. It's now up to $849. Absolutely insane. Everybody believes in Elon. In Elon do they trust? Trade desk 71.92% increase. Again, relatively small amount. I had a little bit more in there, but that was one of my regrets because trade desk was up about 100% at one point. But you know what? This is all about percentages. You put money in these companies you think are going to do well in the relatively medium to long term, and you just sort of are rolling the dice now as fundamentals maybe don't power the stock markets like they used to. We saw it with the GameStop last week, a stock that's probably valued in the, I don't know what that stock should be valued at, but go up to $400 US. Shouldn't be up there. It's probably even overpriced now. I think it was down to, let's see. Let's look and see where GameStop is today. Oh, see, we're all the way down to $56. And I don't know that the stock may still be overvalued at $56. So, but I will be holding till death on that thing probably. Anyway, that's the portfolio again. Started with 5,792, we're up to 10,758 pounds. Got very, very lucky. Obviously some research done. It wasn't complete gambling, but what did I gamble? If the one thing that I would say was a gamble out of this entire portfolio is probably the C Limited. I didn't really know too much about the company. I did a little bit of research, but I had read some favorable things online about it and people that had invested in it and done well. But again, didn't take really a big position in it because I didn't really, my knowledge of that company was relatively small. So I'm sort of very risk averse to things that I don't really understand. But I took a little bit of a flyer on that. And then the Too Low Oil. I mean, this is really a high risk. It's a very small company. Market cap of less than 250 million pounds, so very much a boom or bust type investment with a negative earnings per share amount. So this is really a play for the future and what I think possibly that company is going to do. Again, could totally be wrong about that, so not intended to be financial advice. So that's the update. We're almost up to now. There you go. I'm going to see if you have any more comments that I can answer for you. I hope you enjoyed that update. If you did, let me know. Because I just want to be transparent, show you what I'm doing. And, I'm not just sitting here saying, this is what I'm doing, but not showing you any proof. I mean, that's my own hard-earned money that is being invested to bring you this portfolio. And again, I'm big fan of index funds. Most of my money goes into index tracker funds. Super happy to keep doing that. I think they've done really well over the last year too. The index trackers continue to climb and track the market. So yeah, let's see. Mike Powell says DFL 032 was repaid in full plus interest. Okay, there you go. Mike knows a hell of a lot more about this Lendy situation than I do. He is on the Lendy Action Committee. So join that on Facebook, by the way, if you have not already. Google it, Facebook it, join up, keep an eye on what's going on with that Lendy administration. Richard McDougall says, reading some of these comments, people like this peer-to-peer hopefully not put all their peer-to-peer investment into it. I'm surprised investors are not fully diversified. Agree. Diversification, highly important. Just like you were if you're buying stocks, you'd want to spread it out over some different investments. Let's see. Yeah, I think at least 6 companies is probably exactly where you want to be if you were investing in peer-to-peer lending. John Day says, crowd property average loan size seems to be decreasing, investors increasing. So now auto yields approximately 10% of max set. So what John is saying that when you're doing auto invest, you're probably getting about 10% of your allocation. So if you're asking for £1,000 in each loan, you're probably only getting 100. And that's just unfortunately what comes along when a good peer-to-peer lending company is doing the right things. All the investors are piling in. It's like a stock, right? When the stock's going up, everybody's in. When the stock's going down, everybody starts selling. Kind of like that with these peer-to-peer lending companies. When we find a good one, we tend to all want in. Please hit that thumbs up button if you haven't already. Right now, we've got about 62 people watching, 47 thumbs up. Thank you very much to everybody. I really appreciate you being here. Let's see what else. Kerno Flo says, I bought 10 shares of NEO at $47. Seems to be doing a lot better than GameStop. I bought it at $198. Yeah. Again, a lot of this is we just don't know what's going to happen. But NEO seems to be doing okay. GameStop was more a principle, like screw you to the man for me. I wasn't buying into GameStop to really make anything. In fact, I fully expected to lose money on the stock. Sonia, hi, welcome to the stream, Sonia. If you're new, welcome. Lending works are allowed by the FCA to recoup the default and interest from bad years. In the last 3 months, lending works have removed over $2,500 from my investment loan capital. Is this happening to anyone else? I mean, they are calling it negative interest rates, Sonia, and they're removing a percentage out of your account for that. But I don't know what your account balance is. I guess if you had $1 million in there, maybe that 2,500 would be something you would see. Yeah, but we're all experiencing money coming out to cover this fee. It's really a fee. Patty is here. I'm late. Sorry, I had to work. Okay, welcome, Patty. You can always watch the replay. Dave says, are option profits counted as capital gain? That's a good question. I don't know the answer to that. I think that it could be considered income because you're actually getting income. You're not gaining off the stock because it's not rising. So you might want to ask your accountant about that. I don't know because I haven't, number one, I'm doing it in a tax-free account, so I don't worry about it. But, yeah. Oh, also, I want to just make the distinction, too, between options trading and CFDs. Completely different thing, right? Number one, I don't trade options naked. That means that you can actually buy options without owning the stock. That's very, very risky. Your losses can be unlimited when it comes to that. You can lose everything you put in. So CFDs, I don't trade CFDs. I don't advise anybody do those. These are all covered calls. Everything is secured by the stocks. You can do it in reverse too. If you can write puts if you want to actually purchase the stock at a lower price. You'll get premiums for that. I call that a cash secured put. That means you got to have the money in your account to buy the stock if it gets assigned to you. So risk, again, much lower. Important distinction, CFDs. Also, yeah, be careful if you spread betting, Forex. I don't mess with any of that. It's very high risk. Alan, I could lend you the ball, sure. Dave says selling covered options is fairly safe done correctly. You're just limiting any possible gain, really, absolutely. You're right. Or you set the gain that you want to own. You can't see the bottom numbers. I am covering it. Sorry about that. Jimbo Naughty, any current news, thoughts, or opinions on Able Rate? Able Rate I consider, again, more of a high-risk deal. So I tread carefully when it comes to those types of high risk, high paying interest. Just know when you're getting high interest, you're taking much more risk on the loan. So I don't tend to put too much into those companies. But, we've had David on the stream. I like David. I think he's doing some good things, but I don't really have any news or updates on them. Mike says, I don't get why someone wants an option to buy stock that they can just buy in the market for less. Well, first of all, number one, they don't have to put up the money to buy the stock. A lot of these traders they're doing it naked. So if they want to take the option on your stock, all they have to do is put up the money for the premium, right? So for the options on that NEO stock, imagine all they've given me is $339, right? Now they have an option to buy those 100 shares without actually having to put up the capital. They could totally profit on that trade without ever putting out more than that $339. So let's say that stock price goes to 75, right? Now they get a stock that's worth 75 that they took an option out at 65 without putting up any cash. They can close the trade out before the expiration of the option, and they get paid the profit. So that would be the $10 a share less what they paid in the premium. So that's exactly why they would want to write options. They're basically gambling on what's going to happen in the future. It is a gamble. Alan says, I signed up for Able Rate so I could see the loans, but I didn't fancy them. Mostly business loans with borrowers with multiple loans. I preferred secured property loans. Yeah, some of them are secured, but again, high risk, high reward. Debbie, with regards to the person at the other end of the options trade, why do they do it? How can they win? Again, if they're very, very bullish on the stock and they think that NEO is going to be $100 in a month and they just bought an option to buy the stock at 65, they're going to make a lot of money. That option contract becomes more valuable, right? The higher the price of the stock goes. So it's all, again, they think the stock's going to go high. They'll take the option. Paul, what platforms can you use for options? In the UK, you can use Interactive Brokers, and US, you can get an account at Tastyworks to do it. Oh, too, there's another thing in options. You can actually close the trade out early. I did this, did I do it on the NEO trade? What happened was because the price was very much close to where I started the option at. I think it was at $57, and there was a couple of days left on the options contract. What happens is you have a thing called time decay. So time works against you as an options contract buyer, not as a seller. It works in my favor, but it works against the buyer. So as we start to get towards that expiration date, right, and we're climbing towards that expiration date, if the stock price hasn't done anything or it's way under the strike price of $65, the option contract starts to become less valuable. I can close that trade out early, right? Pay a small fee. I think I might have paid $8 to close it out 3 days early. Because if I see a big spike in the price, right, I don't want that to happen at the end of the option contract. So I can close it out early and then rewrite the contract again. So time decay is important when it comes to trading, making these option purchases and sales. Yeah, it's a tricky, it's definitely a learning curve, but once you get your head around it, it's not that complicated. There's plenty of good videos out there on options. Just again, look at covered calls. Don't mess with the other high-risk stuff that people are doing, like iron condors and spread betting and all this stuff. I don't just look at covered calls and cash secured puts. That's the only thing that I personally use. Kerno says Fastly shares have done well over the last month. I don't want to hear that. Those are ones that I sold out of because they were not doing well. Only because I wanted to put it in Magnite, which have done really well, so. David Lightly says, Crowd Property and LendInvest are my main peer-to-peers. Remember, LendInvest is not a peer-to-peer company because you are literally in a more of a AIM situation. You're lending money to LendInvest and they're putting it out on your behalf. It's an important distinction to know. Lloyd's did well today, up 6%. Yeah, I don't know. I didn't really pay attention. Thank you for the dog compliment, Annabelle. That's nice. Dave says there is some research that says with stocks and shares, if you have more than 10 individual stocks, you may as well buy a tracker. It's true. I don't know. I mean, well, I guess I don't. Do I have 10? I probably got around 10. But yeah, every strategy is different. And I wanted to test it out. I think this trading 212 strategy is very, very, very high risk. But again, with high risk, you're going to get some good rewards sometimes. But yeah, I don't know. I have looked at Stitch Fix. I'd passed on them. Again, just didn't want to own everything. There was other stocks that I had for the portfolio that I thought were more interesting to me. But yeah, Stitch Fix is one of those that seems to be doing really well. Mark says, hi there. In the index trackers, do you recommend depositing a large sum or drip feeding in over continuing months, say 10K today and 1K month to month and so on? Yeah, there's been a lot of articles that have been written about that. I'm kind of the believer that you're better just shoving it all in and leaving it, just because a lot of people say, well, drip feed, because if the market corrects, then you're going to go in at the wrong time. Problem is that, hold on. Problem is, I got to open the door. It's a little more. Problem with that is, if the market doesn't correct, then you totally missed out on some major upswings, which is what we've seen, in the markets over the last, definitely since March and onwards. And also another thing that happens when we see these corrections historically in the stock markets, we tend to see some really big upswings after the corrections happen. So if you're drip feeding, you're going to miss out on those big upswings because you're drip feeding in. Personally, I think it's better to shove it all in at one go. And yeah, there's tons of research papers that have proved that to be the best way. Robert, any recommendations on which index trackers? Yeah, if you go to the Financial Thing website, let me see if I can pull up the article. Here, I have it all listed out, what I personally buy, investing. Where are we? I like the Vanguard US Equity Index Tracker. That's the one. It's my go-to, absolutely go-to tracker fund. I like the Fidelity World Tracker, and I like the Fidelity Bond World, what do they call it? The Fidelity World Bond Tracker or Global Bond Tracker. Those are my three kind of go-to ones. Nearly all of the investments that I have is in the Vanguard US Equity Index Fund, directly purchased through Vanguard because it's a lot cheaper. And I don't dislike the Vanguard Global Bond Index Fund. Not too much in bonds at the moment because bonds generally you're just not going to get much of a return. But if you want some downside hedge protection, bonds are good. When the market's correct, you're not going to see a massive drop off like you would in an equity index tracker fund. So you can read the article. I'll put it in the chat. Lists everything in there about the index trackers that I use. I've been using those funds for a long time, since I started investing in my early 40s. So, yeah, if you have questions, again, obviously, we didn't make it under an hour. We never do. That's kind of a joke, by the way, when I say we're always under an hour. We're never under an hour. Ever. Never under an hour. Because I like to give you as much value as I can. It takes a lot of time to prepare for these streams. Usually half a day researching, trying to figure out what the hell I'm going to natter on about for now. So, may as well give it to you as long as I can, right? Alan says, I bought Plug at $9 last July, currently $65. Wow, I mean, that's a huge return. Huge. Mike says, fully expect when dust settles on sticking it to the man will be whole. And many of the stickies won't be. You're right. They're already not right now. The people that have bought in at $300, $400, and now the stock's sitting at $50, and GameStop are licking their wounds. But we knew that was going to happen. I mean, I don't think a lot of people were really thinking about the money side of things. Annabelle, any update on your latest top 5? Nope. Still the same. Dave said, if you're going for index trackers, either a world tracker or an S&P 500. Yeah, I actually like the Vanguard US equity because it's not just S&P 500. It's a broad market tracker. So it tracks stocks in the Dow, NASDAQ, S&P 500. Yep. Patty says, I'll stick to property rentals. Yeah, I mean, if you have enough money, property rentals are great. You do have to deal with tenants, though. The thing about property rentals, if you have a good management company or you're good at managing it yourself, which some people are, they can be great, but man, they can be a complete pain in the rumpus too. I know some friends that have rentals and the places have gotten trashed because they have no idea how to handle tenants. But I do have some shares in some property rentals too, so we just happen to have a really great property management company. There's always going to be expenses with them too. The boiler breaks and the toilet leaks. Lightingworks said deduction would be about 2% annualized. I've already had 2.4% taken in 3 months. Very unhappy. Yeah, I would, call them up and get some clarification on that because I've been given very different information that said you're going to see the most of your annual fee taken within those first 3 months. So I don't remember what the amount that I saw reduced out of my account. I think it was like 1.9%. But I would call them up, talk to a representative and tell them, ask them to look what's going on with your account. Sometimes mistakes actually do happen with these things. You're welcome, Mark. I hope that information helps. John Day says, just had a look at Connective Landing after Mike's comment. Looks like unbolted crowd property. Lawrence, any chance of a quick review by yourself? I don't really have much interest in putting in money into a company that was from the Funding Secure guy, but yeah, I don't know. I'll take a look and see. But I don't think I'm going to get much information just from the website, and I'm not going to invest. So today, anyways, may change next week. Robert Pates, who's the next guest? Likely, hopefully, Stuart Law from Assets Capital. As soon as I get a date, I'll let you know. Yeah, so Richard said drip feeding into funds is better since the IMF warning recently worldwide furlough schemes may be making the markets crash. Again, lots of different opinions out there. I don't think you're going to do wrong either way. I think you could be okay drip feeding, but people were saying, if you look at the years between, say, 2014 and onwards, people were saying the market's going to crash. You can look at articles dating back several years saying the market's going to crash. So if you drip fed, say from 2014 to 19, very slowly, you would have missed out on some huge increases in the markets from drip feeding and not putting it out just in one go. So 6 of one, half a dozen as the other. David says, does property partner count as peer-to-peer lending? Yes, it does. Well, yeah, because it's like share ownership though, so it's a little bit different. But when it's not peer-to-peer is when you're loaning the money to the company itself and they're putting it out into loans. There's not many companies out there like that. In fact, I think LendInvest is practically the only one that certainly I invest in that is not considered peer-to-peer. Annabelle says, still trying to find out if I can invest in Vanguard's index trackers now I'm living in Spain. Really hope so, but don't think you ever found out. I thought I replied to you on that. Honestly, I can't remember what we found. I think with my memory serves me correctly, if you're not a resident, you cannot. But I think if you have an address, in fact, yes, I did find that out for you. You have to be a resident of the UK to invest through Vanguard. There are other companies out there that I think you can buy trackers through, but you need a UK bank account and an address. So, Richard said drip feed half, lump sum half. I don't think that's a bad too. Yeah, do that. If you're really unsure what to do, lump sum half in. I did that sort of strategy. I was helping family members invest, and we had like 6 figures. And this was when the markets were, I think the Dow was 22,000. And I was thinking, oh, this Dow is high. It was at 24,000. And I just put a chunk of it in straight away and then drip fed the rest. So I don't think that's bad. Dave says, wait till a big drop before you invest the lump sum. Yeah, but we don't know, what that big drop looks like. See, this is the problem with trying to time the market, right? You don't know. And I remember it happened to me in March when I saw the drop, the Dow hit. It was went down to 18,000. And I wanted to invest some money, but I was thinking the Dow was going to go down to 14,000. So I waited. And of course it didn't, and I missed it. Tried to time the upswing and I missed it. So, yeah, it's hard. Drip feed, do half and half. Anyway, I'm going to wrap it up. Please subscribe to the channel. We're on this 1,000 subscriber hunt. We're at 910 right now. If you can hit that subscription button, it helps me out a ton. And I'm very grateful to each and every one of you for being here. We'll be back next Thursday. If you have questions, comments, put them in the stream. Put them on the YouTube page. And thank you again. We will see you next time. Hope you enjoyed the stream. Have a wonderful week. Be safe. Be careful out there. Mind out for your neighbors and your friends. And there's more to life than money, so enjoy your life. Remember, Screech from Saved by the Bell died at 44 years old. Rest in peace. I don't know if you ever watched that television show. I grew up on that when I was a kid in England, Saved by the Bell. Kid died. He was 44 years old, so we just don't know how much time we have on this earth. Make the most of it. There's more to life than money. So anyway, blessings to everybody. We'll see you next time. Enjoyed it. Take care. Bye.